The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. S&P's up 42 at 2655. The Dow's up 431. The Nasdaq's up 127. As we take a look at the CBOE consolidated volume, it's much better than yesterday, turning about 4 billion shares now. So we could do about 7.5 billion. So we'll keep an eye on that. But, you know, volume, is it blowing out the doors? No, but I didn't expect it to. We're kind of going sideways and slightly higher at the same time, waiting on earnings, which start on Thursday. And, of course, tomorrow is the big day for me because that's when we start looking at getting into that options expiration cycle, and we get a much better read after the close tomorrow night about where option market makers are thinking. But they haven't blinked at all, not for 2 weeks. They've thought that this market was on the 20th of April was going to expire somewhere around 2,700, a little above that. And last night wasn't any different, even after the push. Got a lot of people fairly bearish about the market. My guess is if they are wanting to be bearish, they're about 2 or 3 weeks early. We're probably going to get back up into that 2,700 or the 2,700 area. And at that point, I'm not going to predict, but volume better, then maybe we go back and tag that highs in the 2,800s sooner rather than later. If not, we may just consolidate in these lower levels until everybody feels a little bit better about earnings. So far, everybody thinks earnings are going to be pretty good. Not a lot of people coming out. No pre-announcements. Has anybody heard a pre-announcement on any stock yet? I'd love to hear it. Because you know what? If we're going to have a lot of stocks missing, then we're going to start seeing pre-announcements. And I haven't heard of one. And we certainly should be starting to see them at least on this first run of earnings. So if you're looking for bad news, it's probably going to come from the political side of the spectrum. I don't think it's going to come from the earnings side of the spectrum unless something drastically changes. Of course, yesterday everybody was down in the dumps when we closed. Of course, then we had Mr. Z, not Z, Xi, come out and give a very conciliatory speech because guess what? Everybody knows that these guys have been gaming the system for trade, and his outright staunch declarations from most of the spokespeople in China over the weekend got France kind of off the edge of the table and start to stand with us, and of course also England. So we started lining up a few people, and real easily he decides to flip a coin and go to I'm going to be conciliatory, and of course he has no desire to be conciliatory. He may be forced to, but the only reason that we saw a rather rapid change was a handful of folks saying that we're more than willing to get with you on this one-way trade we see with China. And so saw a few people lining up on the other side, decided to exit stage left from the we're not going to be very helpful in this trade deal to, well, maybe we could be kind of helpful in this trade deal. No one knows what the end of that would be, but just the tone seems to be something that everybody likes a little bit better. Of course, market is higher. I don't see much of a change out here. And again, I'm not expecting the market to blow out to 28.50 before the end of the month. Why anything's always possible in the stock market, I'm just looking for us to kind of go up there and finish kind of a little consolidation, and maybe those earnings take us higher, maybe they don't, maybe there's more political fallout. But I think I could see fairly clearly, as I've said the last week, that we're just going to kind of stumble up here. We also talked last week about the thing I've been talking about. What is it? The rule of alternation. I wanted to cover that again, and this is exactly what it feels like. If you go straight down, you get that choppy, almost can't hold it kind of move in there. So I don't know if we need to beat up on that subject anymore, but that's about it. And, of course, we've got a little bit more to talk about. My favorite punching bag will be on the TV in just a handful of minutes, and we will see if Comrade Zuckerberg, what he has to say. But you never know. Anyway, as always, we come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, we like to start off with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1963, the USS Thresher, an atomic submarine, sinks in the Atlantic Ocean, killing the entire crew. 129 sailors and civilians were lost when the sub unexpectedly plunged to the seafloor 300 miles off the coast of New England. And they were doing trials. This sub had been rushed out. Some of the welds weren't good. What they actually found out was one of the valves was installed backwards. And by doing that, when they opened up the valves to blow air into the tanks, what happened? Well, it froze up with a big blob of ice. The engines had already shut down, so they couldn't drive themselves to the top. They couldn't blow the tanks either, and it sank to crush depth and blew up. What they did find out, of course, was that they were pushing all these subs out before they were ready, and after that one, they only lost one more. I think that was 1967 or 8. That one most likely because of a torpedo that blew up. Same thing that sank the Russian submarine in 2001 or 2000. I think it was 2000. And that was about it. We haven't lost a lot of subs in the recent history, mostly because these two subs sinking went to a very stringent, almost like a space shuttle or a space launch on working out everything in these subs. They're probably the most technically advanced things we actually have built achievements that don't go into space. On this day in 1963, a big mistake. And hopefully we do not do it again.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, we're talking about Otis, the drunk in Mayberry RFD. I never could. Every time I saw an Otis elevator, all I could think of was either he was the guy that designed it and became a drunk, maybe he was related to a drunk. You always think, I always get these associations stuck in my head, and they're tough to break out of. Anyway, every time I see an Otis nameplate on an elevator or escalator, all I can think of is the town drunk. We're up 45 points on the S&P. Cash fake book is Mr. Zuckerberg is getting ready to come out, and of course he's already paid off everybody on the Senate committee. I think 85% of them got money from him in the last 2 weeks. Met with him yesterday, I guess, to rehearse this kabuki dance. Is that what it's going to be? And of course, nothing new. He did we knew everything that they were doing in 2012 for that election, and nothing changed in 2016 other than who won, and that's why a handful of people are all upset and up in arms. But I think he's kind of a skunk, so there's a little bit of Schadenfreude for me. He's always spouting off and, of course, doing the opposite. He bought a big house in Hawaii and told everybody that walls don't work, and the first thing he does is build a wall. And, of course, as somebody that avows socialism, first thing he did is try to throw everybody off their land around him. So we kind of know what kind of guy this guy is. And I'm not going to feel a lot of sympathy for him if he gets tied to the whipping post here today. Well, I can play that one again, too. Yes, he was an honest drunk, Otis, the honest drunk. Showed right up, threw himself into the jail cell, and left the next morning. So I'm not going to worry about it, but there's nothing new to see, and my guess is this will be after he threw all the money around and paid his what would you call it? I wouldn't call it a tithe. Seems somewhat biblical. He'll show up. He's had 20 different people grilling him for the last week, prepping him for this. So I don't think there's a whole lot going on. And my guess is that he knows every question that's going to be answered, save maybe one or two, and those one or two may be reason to keep an eye on it. Everybody will act all outraged, and tomorrow they'll go on to something else. So that is kind of the nature of these things. I just wonder whether or not the new policies will allow them to make anything close to what they were making before. And that, of course, is the big question out here. Facebook could very easily do the same thing that many other social media sites had. What is the one that I'm driving myself batty right now thinking about it? It's the one where you review everything. I can't even tell you how much it trades for. I just can't tell you the name right now. I'll think of it. Maybe somebody in the den. The review site. Man, my mind, I'm losing my mind. This is not Sam. We'll think about it. Yelp. Thank you. Yelp. Yelp had the exact same problem to a certain extent. And that it couldn't tell who was real and who wasn't on its website. It's been in this upper range. They've done a lot better, but I'm going to say that minus the huge congressional issue out here, Yelp may be a model for this. It did go down for a great while. In fact, let's go back and look at this thing. Yeah, it got down to 1453. Their deal was that everybody that owned a business was sliming everybody else that owned a business. It was a huge court case about whether or not they could shield users from being taken to court. They could hide their name, give them anonymity. But this is why this Yelp fell back to $14.53. It then started to do better as it figured it out. You don't hear much about Yelp anymore. I don't know if it's going to go any higher or lower, but that was probably the first social media company that took a big hit. And what do you got in there? You know, just kind of around this $45 level. But they did do some things to actually figure out who is and isn't a bot or just a competitor down the street. And I think a lot about saying that you don't have anonymity was that. Of course, Facebook, it's not that you're anonymous. It's that you're just not real, or maybe you've got things that you may not be in the best interest of the community, as they like to say. But anyway, probably a model for Yelp. But I mean, this thing went down to $14 from $52 when they started really hitting those issues. It finally went down to a low. Never really got a retest of that low. I was kind of looking at it back there. I thought, well, maybe it would bounce up to somewhere in that $22 area. But you never really got a good sign. And I don't know if that is something about news-driven ones instead of maybe more fundamental bottoms for companies. But Yelp, kind of a interesting model for what we're seeing in Facebook now. So I wouldn't be surprised if these guys are under a cloud for a while. But my guess is if they pop up fairly quick, we're probably going to continue to see sellers at prices slightly higher in Facebook. What do we got? We got 2 minutes. Big day in the newsletter today because we had bought Sprint. Mr. Sprinty made a beautiful low and test of its low. Let's get it back up here. And why, even though the market may have not made a perfect bottom, I was buying stocks and some ETFs. This February 1st low came in at $4.91 for 42 million shares. It tested it with 11 million shares. You know, I probably wouldn't have bought it if it would have come in there with maybe 20 million shares. But when you come in with about a fourth of the volume, Not only that, but you had a nice pop off that low, went up to 564. You had a beautiful retracement on no volume all the way back to those lows. And now you have a big pop. Now, the story on this, of course, is T-Mobile and Sprint are trying to get the band back together for their merger. I don't know how long this is going to go. It's not going to be over in a week or two, but I think we probably caught a lot of people short in these two. Let's take a look at TMUS. And, of course, the whole purpose of T-Mobile for the last few years has been to irritate all its competitors until they buy them out at an exorbitant price. This is going to be kind of more of a merger of equals. And, of course, this makes them as big as others out there. And, actually, I think this would make them the biggest out there. And certainly because of the spectrums these two different carriers own, would be a pretty big monolith. Now, this merger already got nixed by the Obama administration. I don't know if anything's physically changed in what they've talked about, but we will continue to keep an eye on it. And, of course, I will be in it. But Mr. Sprinty up 20% today, so the newsletter is feeling good. Back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, Mr. Zuckerberg is ready for his close-up, getting a lot of pictures taken. So we'll see if that actually ends up being anything, but probably a bust. and we'll probably keep traders distracted for a little while as we go into this end. So let's take a look at volume again out here, 4.4 billion shares. So looks like we're going to have more volume than we had yesterday, which is pretty good. Liquidity has gotten a little bit better according to Nanex, but still not good. We're way off what we had been before. And then, of course, the more important things of the day is the dollar futures. DXM8 is down 19 cents today. And we had a little bit of commodity push out here, mostly in the energy patch. This thing is up, 3% on crude in a day. XOM did very well. This thing had been trying to bottom for a while. We talked about how this one was testing its 30 million share low of February 9th. It did so at, that was 73.90. Got to 72.16, popped back into the trading range, and here it goes again. So, again, when we talk about stocks that come off highs with a lot of power and energy, it doesn't mean that that's the end of them. It does, especially if you get a test of the previous low. But it does mean, at least to me, most times, you're not going to get some kind of V bottom. It's going to take a little while to get everybody over the bad stink that it had on the way back down, and you're going to get a bounce. Now, the question is, how good a bounce are you going to get? So far today, we've got, let's call it 12 million shares. And, you know, what you're really looking for is about somewhere between 17 and 30 million shares. You had a nice spike on February 12th. So you're going to have a lot of people, especially this down candle of the 5th of February that had 30 million shares. You're kind of in the bottom of that now. But this is where you got the kind of the easy money is over. And as we move higher, as I said, I suspect we're just going to stumble up. Up there. Yep. Comment in the den that Snap hasn't really pressed the flesh. And you kind of wonder about two things. One, they're doing all the same things, so they're just willing to shut up and hide. The other one is that they're in their quiet period for their earnings May 1st. And I mean, you're only, I think the quiet period is 30 days. So I'm going to check into that, but I think it's 30 days. So they may not be able to say anything legally going forward. But I don't know. Never seemed to stop Mr. Musk from spouting off and tweetering things. But you never know. Yeah, no oath, no nothing. Okay, so let's look at some other ones. Now, we saw that one of the first new power plants, nuclear power plants, got a license over in Miami yesterday. You know, you've got, at least on CCJ, a test of the previous high. This is one of the few highs that really had lower volume. There are not a lot of stocks testing previous highs. January 12th, $9.98, 2.9 million shares. You basically got started to get into that with 2.7 million shares on the 5th, but the last couple of days, the volume just hasn't been doing much. Certainly don't have much as it went to yet another high today at 858,000 shares so far. So you're going to be kind of light, especially any kind of follow-through on those. CGI, which is a Celadon Group. I was kind of looking at this one, was trying to find a couple of new positions to add in the newsletter. We've got quite a few, but I wanted to add kind of up now that we're probably over the hump. And of course, starting tomorrow in options expiration, we've got basically an 80-some-odd% chance that whatever the low is tomorrow, we close higher than that. So you're about a day away from probably setting a low for the next 7 or 8 trading days. And that's kind of it. There's not much there. Anyway, I was looking at this one. Another good day of light volume, but what you really need these things to do is in about 3 days is pop back into the trading range, much like XOM did. But we don't have that yet. But still continue to have light volume. So these can pop back into the trading range. Maybe you can get some cash out of them. Murphy USA, let's take a look at that. Okay. This is the one I thought was kind of interesting in that energy was doing better, but Murphy USA, a gas station, not doing as well. Actually, some fairly decent volume yesterday, 512,000 shares. This one looks like it could possibly break this $67.59 low. You got a little spike out here, a little hammer today on 343,000 shares, but no real sign. I guess maybe this is more of a fast stop issue than maybe a gasoline issue. But I thought it was kind of interesting because most everything that it tested on lighter volume had already gone through. Pay, of course, got bought or is doing a buyout to a private consortium. They went up to $22.87. I think that was a 50% pop this morning. PH is another one I've been looking at. This is Parker Hannifin. Now, this one has been kind of making lows, and what it did today, like a lot of other stocks that weren't fast out of the gate on the lows, is get itself back into the trading range. Now, there's not a lot of volume in this one yet, but it didn't actually look that bad. 2 million share low on February 9th, 168.44. You needed to close above that. You had a little doji the other day. A little pullback, but not a lot of juice yesterday. And, of course, we're up today on 800,000 shares. That puts you back into the trading range above that 168.44. So we're, maybe these aren't the ones I'd be buying. In fact, we're long a bunch that actually tested lows on lighter volume, like Sprint. But, you've got to be in it to win it, and that's kind of it. Now, don't know much about this company. I couldn't find out any more about it. It was one of my candidates that I did not buy. But it does look kind of interesting. March 16th, $6.34 on 1.5 million shares. Got into it with a third of the volume yesterday with this 420,000 shares. Now it's back into the trading range too. I like this one even better because the energy on the way up to this March 22nd high was much better than the light and variable volume all the way down to 610. But a close today on a lot of these stocks is going to put them back into the trading range. The stocks that probably had broken down are pretty much done. Let's take a quick look at Snap, because it would be the benefit of Mark Zuckerberg falling down. I just don't see a lot in this one right now, and I think they're going to have some good news to move forward. This thing could kind of go sideways to May 1st. You never know. I like it. I mean, this is a good-looking pattern. It could do something, but no sign yet, other than this nice little doji with no volume today. We'll be back in a minute.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks! Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
John from Miami wanted to look at some of these stocks that are in the supply chain for Apple and other cell phone providers. Avago Technology did a pretty good job. It didn't break this low, which would have been a little bit better. The February 6th low came in at 224.90, so 7.7 million shares. You got almost there, 225.44 with 5.3 million shares. So you came in with 2 million shares light and you kind of moved a little higher. Again, I'm not a big fan of any of these stocks that came down on real heavy volume or energy off this, like on this one, the March 13th high. They tend to bounce, and maybe this is where you get your 50% bounce, and then they kind of come back down, and maybe you get a retest of the low, maybe you don't, and maybe they get into some kind of complex ABC on the way up, but they're a lot harder to trade, and that's why I'm continue to don't think we're going to see a great deal SWKS in this. Although Apple seems to have found some life in it. We'll look at it in a minute. This one's kind of the same thing with Skyworks Solutions. Didn't and wasn't able to get down to the 94.33 low February 5th to the 95.22 is what we saw on April 6th. So you got into the candle, you weren't able to break it, but volume on this one was much better. You got a little pop out of here, but again, this, in fact, actually, this does look much better than Avago. Energy was about the same on the way up and the way down, and of course, I like to buy stocks that have less energy on the way down. So again, continue to look at it. Let's take a quick look at Apple, and then we'll look at the SMHs. What do we have here? Yeah. Just on Apple, this thing's just in this lower trading range. You're up on lighter volume here. Let's take a quick look at the SMHs. The one thing I was kind of interested in is there was a lot of talk where I thought that the news on Intel was rather self-serving by those folks. So let's go to that. And a paper out today talking about Intel's exposure to Apple, and maybe Apple replacing them as the processor in its iPhones. And it looks like Apple probably would not be able to get enough product out the door unless they built a factory to build the chips themselves. So a lot of people thinking that Intel had problems with Apple leaving. We talked about that. I didn't think it was much to begin with. It may even be less. This paper basically says that they couldn't go to anybody now and start making chips in 2020 with the kind of volume that they need. Right now, they've got to go to Samsung or a handful of other companies. But Taiwan Semiconductor probably couldn't do the chips that they do already with them and do the processors at the same time. I think Samsung does 2/3 of their ARM processors. So I think that may be well overblown, and of course a lot of people have been taking pot shots at Intel. Let's take a quick look at Microsoft. I got the brand new version of Windows 10, downloaded it right before the show. I'll be installing it tonight. It's the Spring Creators Update for Windows 10, free to people that have it. If you know what you're doing, you can download the ISO and install it. I'm going to do it instead of fix of a couple of other things that were mildly wrong with my installation. I could go through it, but probably just easier to install the new version and have it clean everything up for me at the same time. This thing continues to want to bounce around, and my guess is it is going to hit 100. This one may be the one that helps the tech sector get higher. I don't think a lot of those stocks like Facebook, like other ones, are going to get back higher, but I do think this one hits $100. Everything continues to go as well as humanly possible for Microsoft. They've got some new products and just continue to be operating exactly the way they're supposed to be doing that. Let's take a quick look at Netflix in FLX. Got plenty of time. You can give me a call at 877-927-6648. Although I have a feeling a lot of people are watching the Zuckerberg thing. I guess just purient interest. Okay, 4 dojis on Netflix. So the question is, what's going on with Netflix out here with 4 dojis side by side by side? Well, you're sitting right under, there's a big candle from the 27th when it came down with 12 million shares. But it's doing what it needs to do, i.e. to consolidate. The question is whether or not it can blow through. It wasn't all that big of a volume in that candle for Netflix. You know, 12 million shares, you're kind of, you're at 9 million shares already. Question, is LinkedIn contributing much to Microsoft EPS? The answer is it is starting to. And that is, it just got linked 3 months ago to all your Word and Office documents. So the idea of being able to wind that back in certainly is that. There's another thing that is very much like a, what's the name of that thing? Man, am I having problems lately with my memory. It's a messaging app for many people. It's kind of like the Tiger's Den for people. And I actually set up a room on it and it did everything else. No, it's not Otis. It's not Yelp. No, God. I'll think about it here. Do I still have it? I know I still have it. I'll remember it during the break. I've got it on this machine. I just can't remember what I did with it because I haven't used it for a little while. But I'll remember it, I'll say, on the opposite side of the break. Anyway, there's a program that's very much like the Tiger's Den where you can set up meetings for everybody in groups inside your company. And Microsoft's been working very hard on their own version of that, tying it back together with LinkedIn. And my guess is that the big killer app for LinkedIn and Microsoft and Office is having that last piece to put everything back to alignable, to put all that back together. But I think that's it. If you had some kind of group room where you could talk about designing your next product or advertising in a community kind of atmosphere, but inside the company, That's exactly what everybody's asking for. It's the biggest, I think it's the biggest company that will IPO in the next year or so in Silicon Valley. Just, man, just skips my mind right now the name of it. But I'll get it during the break. We'll talk about it when we come back. It's like GoToMeeting, but it's much, much better. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer's Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guaranteed trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. The name of the company and the product that Microsoft's working as a competitor to that I think is really going to drive Microsoft's earnings in the near future is a competitor to a company called Slack and a product called Slack. But it really is set up for groups somewhere around 40 or less. It's got all kinds of add-ins, kind of like either your browser add-in. It's got basically an app store, so you can plug in things like video. But if you want to put in pictures, links, all that kind of stuff, it's very good for small groups, and kind of what it's tailored to is small groups and businesses that have to work on specific products, engineering, all kinds of other stuff. Anyway, you can buy a Slack server. You can let them host it too. But anyway, Microsoft saw that, and they want to basically put that in as a product as part of LinkedIn, and then link that back into Outlook and all your spreadsheets. So basically, they're trying to put this whole thing together. I'm not exactly sure. I haven't heard a release date on any of this, but we've seen the first round of them starting to circle the wagons for Office, and that is going to be a big part of it with LinkedIn. So anybody you know, you can put that back on. So anyway, I think Microsoft at least is doing everything right. The market may go lower and drag them with it, but I think it continues to look very good for what it's doing. The market could always start making that PE a bigger issue. But right now, Microsoft continues to hum along very well. Check out Slack if you got a little group that you want to put together. I've used it for some of my groups for machine learning. In the meantime, sell when you can, not when you have to. And we'll see you here tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.